Hey everyone, happy Tuesday. Today is October 4th, 2022, and here's your mortgage market update for today. As of recording, mortgage rates are 36 basis points better than close of day yesterday. We did see the 30-year fixed rate come down yesterday to 6.69%, with the 15-year dropping to 6.08. Treasury yields are continuing the rally this morning and are down to 3.61%. We did see a big rally in bonds yesterday, led largely in part, believe it or not, by the UK walking back some policy that they announced a couple weeks ago that really led to some volatility in the bond market. So we can thank the Brits for that. We are seeing another big rally in the markets again today on the stock market side. Markets are up around 2% across all indexes. I did want to point out, though, this was pretty interesting. A lot of this was driven or in part by a miss in the ISM manufacturing index, which might indicate a slowdown in the manufacturing industry. And that data came out yesterday. But with any big rally, I'm always a little skeptical. And this gentleman, Nicholas Kolos of Data Tech Research, pointed out that the S&P rarely rallies by more than 2% in normal market conditions, and suggested that yesterday's rally, and by continuation today's rally, might be more of a sign of fragility and not strength. He pointed out that between 2013 and 19, for example, there were fewer than 4 days each year where we saw a gain of more than 2% in the S&P 500. And so far in 2022, we've had 14. And I want to quote him here. He says, "History strongly suggests that Monday's 2.6% S&P rally is neither healthy nor a sign that the index has troughed. Markets have been trying to predict a turning point for Fed policy for months now, with as yet little success given the ongoing strength of the U.S. labor markets and still high inflation." So really, I think, what he's really trying to reiterate is that we'll continue to see this extreme volatility really until the Fed reverses its hawkish stance on rate hikes. And investors seem to be thinking that the slowdown in the ISM numbers might indicate a more dovish stance, but we'll see. I don't think that one data point is enough to point that out. But like I said, we did have that ISM miss this morning, which could be good news for future rate hikes. We do have the JOLTS job report coming out here in about an hour as of recording. So we'll see where that comes in. And then, of course, we do have a lot of, inflation numbers coming out later this week with some employment numbers as well. So keep an eye on that, guys, and we'll be back here tomorrow.